Hey guys, per usual, everything on this channel is for educational and entertainment purposes only and is not intended as financial advice. So the People's Bank of China has said some things and it caused price to go down. They also did some things that caused price to go up. So the moral of that story is that China, being a communist country and having this sort of monetary system, can do whatever they want, whenever they want, regardless of the size of Bitcoin, the size of capital flight through Bitcoin. No matter what they want to do, they're going to do it. Why they're targeting Bitcoin is anyone's guess. I don't really have an answer for that. I'm just guessing that they feel threatened in some way by it. Who knows? But more announcements are likely to come, just as they were likely to come before all this stuff happened. Announcements were more likely to come as price got higher because all of a sudden Bitcoin was on everybody's radar, and if you're plugging holes in a sinking ship, you're going to go after anything you can. So any new announcement I expect to be bearish for price. You can't expect them to relax regulations in any way. You can expect increased KYC AML on any Chinese exchange. You can expect decreasing the use of leverage. You can expect volume to be somewhat more accurate, which is actually a really great thing for Bitcoin. And one thing they didn't do outright was just ban Bitcoin, which they have the ability to do. So not only would that cause price to tank, but that is a different type of fear, uncertainty, and doubt, a different type of FUD event than a singular complete event that occurs, happens, and it's done. This is an ongoing thing. This is a death by 1,000 cuts thing. This is a slow bleed, let's demoralize anybody who thought they could get away with this sort of thing, okay? So if you contrast this FUD with all the other FUD Bitcoin has had in its history, Silk Road being confiscated, Mike Hearn rage quitting, Bitfinex being hacked, all those events occurred, happened, and largely were over. This, however, is ongoing and really was always ever present, but with the price being where it was and China's constant devaluation of their currency, I think brought everything to a head with the PBoC. And again, like Alan Silbert said, Bitcoin capital flight is basically a rounding error for the total aggregate of what's going on in China. So who really knows overall? What I'm more concerned about really is the mining network, because if China decides to ban miners, which they can easily target, focus, and go after because they can look at electricity usage in random jungle rural areas and say, oh, this is a clearly Bitcoin miner just based on the electricity usage in the area. So if they go after the network, that is a huge concern. If they go after the price, not a huge concern. Obviously, as a trader, it's a big concern. But near-term price is recoverable, long-term price is recoverable, and long-term losing the network is recoverable. So really, the protocol is intact regardless of what happens in China with miners or banning leveraged trading, okay? So that's some saving grace. And if we look at Bitcoin versus BTC CNY versus USD 1 renminbi, so the PBoC sets the value for this every day. You can see as the yuan got weaker, so as the exchange rate between the dollar and the yuan got weaker, the price for Bitcoin went up, so that's no coincidence. And there isn't enough evidence to say that they're directly related, but considering that China is most of the Bitcoin volume, it's pretty safe to say that the correlation makes sense. So that's PBoC, and one reason for them not to ban Bitcoin is because if they do ban it, it's harder to track. It goes to the OTC markets, but if they can constantly monitor it through the exchanges, then that's to their advantage, definitely. And really, that's all they have to say on PBoC. The announcements themselves aren't as important as how they were perceived. PBoC is sort of staking out in various exchange headquarters for a week or something. Who really knows what's going on over there? But the point of it is, we all know what happened when that news broke, okay? Something super interesting. So this is the current top holder on OKCoin futures. This is contracts total. This is the highest value ever recorded on OKCoin based on some metrics you can look at. There's general conclusion that that person is mostly long or all long. So that's 311,000 contracts long. Margin calling that would be pretty interesting. I don't know the exact level that would be to margin call. I think my target at the end of this video and the charts that I'm going to show you for the bear target would probably margin call that person. So we'll see. If they're right in being sort of bullish and expecting a bounce, you know, they're going to be sitting pretty with a huge bounty. I think they get like 42 Bitcoin every dollar the price moves with that amount of contracts. So it's pretty insane to be holding that amount. And then lastly, for fundamentals, still check out SegWit signaling support, basically flatlined at around 26%. Again, most of the miners are in China. They don't really have an incentive, I don't think, to switch over. All right, so let's get to some charts. We got the BTC, CNY, OKCoin weekly. So what I like to do is present bullish and bearish evidence and then make a decision. I like to gather it all and figure out what I want to do. Now, a lot of people think that all I'm saying is it's going to go up or it's going to go down. Well, yeah, it is going to go up or it's going to go down, but you have to use your judgment on what evidence you want to make money on, okay, or attempt to make money on. And based on what I'm presenting you, use what you're most comfortable with, and if you don't like something, don't use it, ignore it. If you don't agree with me, it's fine. I don't expect you to agree with me on everything, okay? Alright, so back to weekly. Like I said last video, OKCoin volume, highest ever recorded. Obviously some of that isn't real. Anyway, we had a nice bounce near the Kijun, which is sort of expected. Kijun is equilibrium, Kijun is support when you're above the Kijun, it's resistance when you're below. Price is going to continually want to return to that level as long as it's not on that level. Something else to notice, the pitchfork for CNY drawn from these 3 points doesn't look great, even starting, you know, in here compared to the USD version. So what I've started doing is adjusting it and moving the points up a little bit. So this, you know, rallies pullback. This is Bitfinex hack, and then this is the high before that. And you definitely want to draw this on the daily, because if you pick the points on the weekly, it's going to be slightly off when you go into the daily. I don't know why. It's just the way it fits on the points. So price-wise, you know, these candles obviously don't scream bullish continuation to me. We're clearly at the bottom of our range. And like I said on Twitter, we're either at the very bottom of the trend or we are starting into bearish mode, bear consolidation. Based on the weekly cloud, like I said in the last video, we can bounce up and down. And here, it's obviously hard to trade that. But as long as we're above the cloud, that is bullish, period. It's a yes or no. It's a binary thing. It's like if you're above the 200 EMA on the daily, you're bullish. If you're below, you're bearish. There's no fudging around with that. Now, if we were to get something epic like a cross-recross of the TK lines above the cloud on weekly, that would be like a sell your house, mortgage, children, organs, your grandparents, that type of long. So I'm looking for that, should that occur. I don't think it will, but that would be basically July, September, that range. This still has to cross if it's going to cross, and then it has to recross, okay? RSI looks nicely reset around 50. I like to think of 50 as like a zeroing out, stabilized equilibrium middle. Stoke, I don't know much about Stoke, but it clearly crossed, which is bearish, and it broke the 80 mark. So it's definitely not bullish continuation. Stamp on the weekly with pitchfork and cloud. It actually looks much better than China. I kind of trust China better because Stamp has had garbage volume. But you can see on the Chinese chart, Kijun bounce, great. We hit this quartile, which historically has been the buy quartile. Anything in here doesn't last long, barring this sort of consolidation area here. So, you know, we may or may not just oscillate in here, but for an extended period of time. But based on the pitchfork alone, that's telling you buy, 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 buy until it breaks. Turn as your friend till the end. The other part that says buy, buy, buy is the Kijun bounce. Again, we're above the cloud, we're above the Kijun. All those things are bullish. Lagging spans above cloud, above price. And RSI and Stoke are basically the same as CNY. You wouldn't expect weekly RSI to go below 30 like it did here. That was sort of the end of the bear trend and the beginning of the consolidation period for the bulls here. So I wouldn't expect this to go lower than 50 if it's bullish continuation. So here's daily CNY with the modified pitchfork with the points moved. And I've also added the 200. So you can see, I posted this chart on Twitter before it happened, but this whole zone was the bounce here or you're in dire bear territory mode, okay? So this is telling me anyway, 200 support, cloud is support, we're getting some wicks. I still want to see a capitulation wick like this. So this was just people giving up, selling, lots of fear here. This was a singular event. We also dropped below the 200 in a giant wick. We've yet to drop below the 200 in a giant wick. This is not a singular event. This is an ongoing thing. So that's something to notice. RSI is also yet to fall below 30 as it did here quite quickly. One of the reasons it did that is because it's basically started at 50 with this 40-day consolidation and then quickly broke everything in the course of 3 days, okay? Even though this is a bigger pullback, look where we started. We started from like 89 or something like that. And Stoke couldn't be more on the ground than it already is on the daily. You don't see that too often. To me, that says this is very FUD driven, fear, uncertainty, and doubt, just based on that oscillator. And you'd want to go look for longs when the cross is above 20. So again, just like the USD pitchfork, you know, this whole quartile was a buy zone, and you can see how well that worked out. Here, you can't not expect that to continue to work out. Here, it'd be better for me. I'd feel better. I'd just be able to sleep a little better at night if we were in this quartile, but it is what it is. Here's daily Bitstamp USD. And you can see stamp pitchfork looks a little different. It's drawn from different points. We've yet to touch the 200. We've yet to touch the cloud. We've yet to touch like the edge of the pitchfork here. RSI hasn't gone below 30 like it did Bitfinex. Again, Bitfinex singular event, giant instant stab down that broke the 200 on the daily, which hasn't happened since 2015. So again, if we break all these levels, don't expect bullishness from there. I want to go over this real quick. This is the 5200 daily. So like I said earlier, the 200, anything above the 200 is bullish, anything below the 200 is bearish. There are special crosses of the EMAs that are named. So this cross here is known as a golden cross. That is a super bullish sign. Generally, crosses are lagging indicators, which is why they're not the best plays on every time frame. You can see here we had a death cross indicating a bear market. You can see here we're in no danger of making any sort of cross here on CNY. If we go to stamp, again, golden cross, death cross, no danger of anything here. One other interesting thing I saw in 2013, you can see again, singular event, the wick broke the 200, bounced back up, just like the Bitfinex hack. Singular event, ongoing FUD. Something to look forward to in the future. We'll see how this plays out, obviously. So here's the 4-hour stamp with some more EMAs. Again, if I'm comparing just fractals and dumps, you can see how sort of technical analysis met fundamentals here in events, because other people will argue with me on this, but the closer the EMAs get, that basically says we're going closer to a 50-50 decision. The decision was essentially made on this first candle here. Now, I think overall this was event-driven. I think we should have broken up, but it is what it is. You can see here how on the 4-hour, how quickly all of this has happened. We didn't have sort of consolidation up here even. Kind of strange, just comparing FUD events, singular event versus ongoing issues. This is also different because we were consolidating. This was essentially all-time highs in CNY terms. Here's 4-hour CNY again, a little differently. Another reason I thought we'd go up before we dropped, so I was long up here. I was looking at Adam Eve, I was looking at TK disequilibrium, which was 1200 yuan. It's 1200 now, which says that pullback is greater probability than continuation. So I kind of expect this fractal to just repeat itself and us to break down again, honestly, because I expect more announcements. Even though there's a bullish divergence, meaning there was less volume on a lower price, I still expect more nonsense shenanigans to happen. There was no div on RSI or Stoke though. Stamp 4-hour looks about the same. Again, bull div, Adam Eve, double bottom fractals may or may not break down on news announcements from PBoC. You can expect at least one more announcement from them that certainly will shutter a lot of traders out of the market, I think. And again, if I'm comparing events, this is Bitfinex, this is now. You can see in between that on the 4-hour, on the cloud, we basically were never below the cloud to this extent or degree. So that just shows you how strong this trend was this whole time. I wanted to go down to the 5-minute just to illustrate. A lot of people ask me, how do I figure out if it's the top or the bottom? Do I use high time frames, low time frames? My general rule is if a big move just happened, move down to a low time frame and look at a lot of data. So look inside of the 30-minute candle, for instance, which is what you're doing here. You're looking at a lot of low time frame candles, which gives you a lot of data. So the cloud is telling you this was the downtrend. This was potentially reversal zone. As cloud flattens out, you can see cloud turns green, and then we have some uptrend. That's a micro uptrend. Other ways you can confirm this are with chart patterns. So this is what I called at the time inverted head and shoulders. You can see the volume follows that. You want a descending volume profile. You can also see the RSI and Stoke are gibberish nonsense and really, you can use them, but I couldn't figure out where my buy and sell signals were based on this paired with other things up here. So I just avoid low time frame oscillators altogether. You can also see that we consolidated in the cloud and recently dropped below the 5-minute. So this is the earliest of early signals that this is going to continue down. We'll see if it will. Here's 5-minute on stamp. Kind of illustrating the same thing, except I don't really see a head and shoulder, inverted head and shoulders here. The volume profile certainly is there. Oscillators are gibberish. You can see the uptrend, the micro trend started here. You had the recross in the TK, which is amazing on the 5-minute. If you weren't long on this signal, you were long here because cloud was green. I wasn't looking at 5-minute at the time, so. The other thing to notice is the pitchfork lines are in the background here. And you can see we tried to consolidate at or above this quartile line and failed, essentially. So we may reach for 700s on stamp. So lastly, let's talk about some predictions, as I am predicting PBoC announcement will happen, at least one more. So you got to think that that's a bearish event. I won't be trading any of this until after the ETF announcement, which is March 11th. I just don't have the patience to have all the correct TA and then something that's out of my control happen. So here I'm illustrating the 3 drives. This would be a TA to predict a bearish movement before it occurs, okay? Now what you do, if you haven't seen this or don't know what this is, you can watch my 3 drives video, but basically you measure out the points with fibs and you confirm that this down move matches this down move here. So the fib from the pullback to the second drive should be the same fib extension as the second pullback to the third drive. So that brings us down to 4K CNY, and from there you'd expect the bounce from this fib up here between 6200 and 6600. So that's my current trajectory. Bounce to 58 to 6200 and then drop to around 4K. We'll see if that happens. We'll see if we get another Adam and Eve fractal here like we did here. Double bottoms, sort of like bull trap, and then drop from there on some random announcement again. Hopefully that third announcement would be it for them for a while. But you never know. Another thing you can hope is that the ETF being online in, a year or whatever would sort of abate the fact that China can just willy-nilly destroy any trend whatsoever. So the interesting part about this third rally target is that it also matches the target for the completion of the bigger, ginormous 3 drives on the weekly, which I pointed out in the 3-drive video. So basically, the target would be somewhere in here. From here, we would go up. That confirms, the lower time frame 3 drives as well. So guys, that's all I have for today. Like, dislike, comment, share. I reply to every comment. I reply to almost every tweet. Hit me up on Telegram. I reply to everybody. We're almost to 1K subs. Donate, and happy trading.